price push away from the deltas that you guys had days in advance. So it doesn't matter if you're doing this on Bitcoin, doesn't matter if you're doing this on XRP, doesn't matter if you're doing this on oil, gold, right? Understand the fundamentals first. What market environment could be created based off of certain market conditions?
All of our risk models were powered primarily by quantitative signals. So we're looking at volume, price action, liquidity, depth, all these things across different markets. But oftentimes the driver, or the vast majority of the time, the driver to all of this type of price action and volatility in the market is news itself. And when news breaks, now we can react to it much faster.
Alrighty, cool. So as I mentioned, I appreciate you guys for giving me like a solid 5 days to kind of just recalibrate and get the mind right, considering that my family had been visiting. In today's video breakdown, I'm going to be going over in detail everything that I utilize and implement to you guys in advance in order to catch these trades in crypto utilizing leverage. Now, I don't recommend that you utilize leverage if you don't know what you're doing, but it is a very effective and efficient way. If you do know what you're doing, you do understand proper market analysis, fundamentals, institutional deltas, and how to implement them in a proper strategy to capitalize on gains in this market. Um, and so I've continuously attempted to show you guys doing the last breakdown why it is that my win rate is so high. And it is because, again, I fixate my attention on stacking as many confluences as I can in my corner to give myself an edge to take buy positions in the crypto ecosystem via the pairs that I trade, which are predominantly XRP and Bitcoin. So I took a trade on Bitcoin today, came away up over $3,000 in my position. I shared all that information with you guys, not only in advance, but in today's video breakdown, I'm going to show you guys step by step all the things that you can utilize to kind of build yourself these confluence in terms of fundamentals, institutional deltas, when all of this information was given by showing you guys timestamps and then going into the technical aspect of it and actually showing you guys some documents that literally break down step by step what took place today in the markets. And we have documented PDFs on this stuff in the CYPRX Discord for you guys to capitalize on educating yourselves and acquiring a similar, if not the same strategy that we use in the markets. Now, obviously, of course, how you implement this, how you stack your confluences and the risk tolerance that you have and the timing in which you approach the markets is all going to change from person to person. But these markets, the strategy that you can utilize in these markets, the one that we've created here at CYPRX and via Institutional Scalpers Order Flow course, it can be used in all asset classes, whether you trade commodities, futures, forex, crypto, doesn't matter, right? The technical analysis, the institutional order flow, dark pools, fundamentals, it all affects the markets as a whole. And so if you can stack these confluences that I'm going to go over today, you can apply them efficiently to pay yourself via these freaking candlesticks. Okay. And I'm going to continuously try to show you guys that here in this community, not only are multiple people aside from myself doing this, but that you can too. All right. Towards the end of this, I'm also going to show you guys the repetitive pattern that I'm going to go over in Bitcoin today played out step by step, literally on XRP. So I just want to show you guys that you can use this on any currency pair or model that you're trading, right? Starting here with a little bit of a motivational push. I said, in these markets, in order to be numbered among the fit, it is necessary to be fully informed, which is why here at CypherX, we focus on the information that matters. All right. So many people in the crypto ecosystem or the trading ecosystem or the financial ecosystem as a whole are always looking for some holy grail, right? They're always looking for some magic indicator. They're always looking for some magic psychological answer to how to become profitable in these markets. And in reality, you just need a solid list of confluences that you abide by, sound rules and risk parameters, and a firm belief in yourself to achieve unprecedented amounts of success in these markets, right? That's really all you need. There's no magic there's no magic freaking button or magic indicator that you're going to come across no matter what community you go towards. Eventually the information is going to get repetitive. However, here in this community, we deliver institutional insights, timely updates, and the most accurate institutional deltas that no other community on the internet provides, right? And so it is my personal opinion, without tooting my own horn, that this is one of, if not the most advanced retail-based community on the face of the internet, all right? And I'm going to continue to prove that point time and time again. So here's another post or I said to you guys, and again, timing is very important. This was on April 7th, 2025. Actually, as a matter of fact, I posted this. Dana, 1981, in the Discord said this. I can't say enough about this group. You people are the absolute best with keeping everyone up to date. I've learned so much in 3 months. Thank you for all your contributions. I try and read everyone's posts and take in what I can from them. CYPRX traders for life, right? And I posted this on X and said, discounts are an opportunity, not a setback for the serious investor. Now more than ever, those doing research, staying disciplined, and tuning out the noise are laser focused on the bigger picture. It's time to lock in, it's time to dial in, and it's time to build. When you step away from the hype and the distractions and truly look behind the curtain, it becomes very clear. The infrastructure is stronger than ever, institutional interest is accelerating, regulatory momentum is shifting favorably, and political support is quietly but powerfully aligning. Meanwhile, many are making decisions from a place of fear. This is when clear and concise research matters the most. Those who understand the macro, those who position themselves strategically, will be the ones writing the success stories later. All right. And so the reason why I read this to you guys is because I mentioned understanding the macro. So that is where we're going to start in today's analysis and how I was able to capitalize on this Bitcoin trade today by understanding the market conditions in which we operate in. All right. So just to show you guys again that I post this stuff in advance, not only to you all privately, but also publicly in case I decide to make this video a public video. This was on April 6, 2025, where we gave you guys our fundamental analysis on the current market conditions and what could possibly take place moving forward. And in these reports, we had specifically discussed a scenario where the tariff implications or the uncertainty surrounding tariffs slightly improves or the uncertainty is dialed back due to some type of optimistic post that Trump could bring to the markets, right? Or that some major jurisdiction could announce easing the uncertainty that lingered in the market pretty much since the 2nd of April. I mean, it's been going on for quite some time, but really started to pick up a lot of volume and volatility at the beginning of this month. All right. Here is our report from April 4th. If we scroll to the top, again, just doing a full digest on the market conditions and showing you all the date. Down at the bottom, we gave our overall scenarios, right? We always do if-then scenarios, understanding the market conditions and understanding how to react and adapt our strategy accordingly. The bottom scenario reads, if global leaders signal de-escalation, or if inflation remains contained, or key growth indicators improve, we could see a relief rally for risk assets, including a bounce in crypto prices. No indicators, no magic Fibonacci's, no nothing, just logical analysis, fundamentals from an institutional perspective, and simplistic TA. It's literally all it takes.
I think early when we started the business, all of our risk models were powered primarily by quantitative signals. So we're looking at volume, price action, liquidity, depth, all these things across different markets. But oftentimes the driver, or the vast majority of the time, the driver to all of this type of price action and volatility in the market is news itself. And when news breaks, now we can react to it much faster.
And you can see we were projecting that the total cryptocurrency market cap would have a bounce from or around the March lows and start to make its way back up to previous premium areas. On April 9th, this is our updated report from today. Okay. Yesterday, we gave you guys our projection on Bitcoin that we were going to come into 80,000. In the analysis yesterday, I even gave you guys my bullish targets of anywhere between 80 to 84,000. And for the total cryptocurrency market cap, I stated that we are most likely going to come back and revisit the previous weekly high. Fast forward to today, you can see that that is exactly how price action played out. And thoroughly reading through this analysis, which we're going to do here in just 1 second, you can see that the fundamentals supported a risk-on mood as previous uncertainty slightly started to fade away under some of Trump's new announcements today surrounding tariff implications. So here, just reading this so that way you guys understand the fundamental parameters before we get into the technical aspect of things. Keep in mind, in previous reports, we were digesting and talking about the uncertain market environment, what was weighing on risk asset prices. We had tariff uncertainty spark massive demand for safe haven assets like gold. We also saw hawkish comments and rhetoric from Bank of Japan and upbeat data from the Japanese front create more demand for the Japanese yen and hike bets that the Bank of Japan was going to hike interest rates this year, which tends to lead to strengthening of the yen. We also saw macro uncertainty surrounding economic data, recessionary fears being priced into the market, which tends to weigh on risk assets, including stocks and crypto. And we also started to see central bank uncertainty from multiple central banks, not just the Federal Reserve, right? We had Jerome Powell speak at previous meetings. I believe it was last week where he delivered some market uncertainty, said that overall the economy still remains on a solid footing, but that the Fed themselves are quite unsure on how, economic data and inflation is going to come out surrounding these tariff implications moving forward. However, they will remain adaptive, data dependent, and will react accordingly to change or, provide support via monetary policy. All right. So I was just trying to go over real fast some things that we were talking about in previous reports. So to pick up on today's report, what took place today? In previous reports, to read this in full, we noted that any positive trade-related news could spark a resurgence in crypto buying momentum. That scenario played out today when President Trump made an announcement on Truth Social, effectively raising tariffs on China to 125%, but simultaneously authorized a 90-day pause with a substantially lowered 10% reciprocal tariff in the interim or short term. Despite the initial alarm about higher tariffs, investors latched onto the possibility of a negotiated resolution. This glimmer of optimism helped revive the total cryptocurrency market cap up by roughly 193 billion at the time of writing. So again, why I'm trying to layer this starting now for you guys is showing you all that back 5 days ago, this is our April, 4th report. We were projecting that this would happen if the fundamentals aligned to project risk assets or propel or create support for a risk on environment. All right. So I'm just trying to show you guys that you had all this information. So when the announcement came today and the market freaking rallied, yeah, maybe in the moment, just like I was today, because I wasn't at my computer, you might have been a little bit confused. But as soon as you go in and you dial in and you read the fundamentals, you're like, oh, okay, too easy, right? We see that Trump announced something slightly positive surrounding the tariff implications. This tends to create a risk on environment. We already knew that this was a possible scenario that could unfold. So everybody that's out there right now making XRP content saying that XRP rallied today because of some whatever, fundamental or crypto fundamental related topic, that is irrelevant right now. Those fundamentals have not been priced in. And if you listen to large financial institutions that operate in the space, right, the actual market makers, for example, a large bank like Signum had a live fundamental update today. And they specifically mentioned that all the bullish fundamentals, the infrastructure, the partnerships, the ETFs, all these things that are the underlying infrastructure for crypto have not been priced in it. The predominant drivers of market sentiment, volume and volatility as of right now are geopolitical headlines, tariff implications, and macroeconomic data, including labor market figures and inflation data. It's very simplistic. We're in a very headline-driven market environment, right? So why the market interpreted this announcement as good news? Number one, temporary pause in tariffs. The sudden introduction of a 10% tariff window, lower than previously indicated, and a 90-day pause created hope that an eventual deal could be reached. Number two, ongoing negotiations. Trump's message referenced talks with over 75 other countries, hinting at a broader progress and less risk of a global tariff spiral. With traders betting on potential rate cuts and the de-escalation of trade tensions, risk assets like cryptocurrencies found fresh support. All right. Then we also had the FOMC meeting in minutes. So just so that way there's no confusion on the FOMC meeting versus the FOMC meeting in minutes, which we got today, I briefly added that in here for you guys. So the FOMC meeting, for those of you all who don't know, is the actual gathering of the Federal Reserve officials to discuss and set monetary policy, rate decisions, and immediate policy statements, and they are made at the specific session. The FOMC meeting in minutes tends to follow weeks after or days after and is a detailed summary of discussions that took place at the previous meeting, where if they need to adjust anything, announce anything new, or just stick to what they previously said gets announced, right? And they are usually released, like I mentioned, a few weeks later to provide transparency about policymakers' views, debates, and concerns without revealing confidential details, right? So I listed some key details from the FOMC meeting in minutes. I'm not going to go over those in today's video breakdown. Long story short, this is the first layer to the trade that I took today on Bitcoin was I saw throughout Asia session, the market mood slightly improving, that President Trump was in talks with multiple jurisdictions, as I wrote out in my previous reports, that he was in discussion with multiple jurisdictions that could possibly lead to easing retaliatory measures via these tariff implications. And that is exactly what played out today. I saw that underlying fundamental possibly creating a scenario for a risk on environment and added that as a stack to my confluences, right? So that's number one. That's the foundation for today's trade environment was that not only am I predominant buyer, but I like to see fundamentals that further support my bullish thesis, which is usually predominant and always, there because I like to buy. I don't really like to sell. And so that was my number one foundation for today's trade was market sentiment slightly improving over Asia and London session due to de-escalations and tariff implications. And then that was further solidified today during New York session, right? Moving on the technical aspect of things. Let's go back again a couple of dates in the past to show you all that you had these institutional delta levels days in advance. So here is a post from Scalper, April 7th, 2025 in the Discord. And you can see Scalper posted these. He actually posted these days in advance on the 4th to be exact, but still today, as of time of recording, is the 9th. And you can see Scalper updated the deltas for you guys on the 7th after the 75490.7 dark pool delta had been met. All right. If we come over here in the Bitcoin chat, I even told you guys, because I always try to tell you all what I'm doing. I said right here, this was on Tuesday, April 8th, that I'm going to be looking for some buy scalps on Bitcoin. I gave you guys my overall analysis. If we can see buy momentum above the 78,500 range, we should see some buy scalps. If not, sellers will continue to show their hand, so on and so forth. Then in the report yesterday for Asia session, I sent you guys this Bitcoin analysis, and this was shortly after Bitcoin had retested the 75490 institutional dark pool level that Scalper had sent when price action had initially touched into it. And I gave you guys this $80,000 projection. My original projection was anywhere between $80,000 to $84,000, and Bitcoin traded up into $83,000 over the last 24 hours. Shortly after I gave you guys this analysis, you can see when I took this screenshot, Bitcoin was trading at around $78,000, right? So you had plenty of time to react to my report and to institutional scalp deltas that were all given to you guys well in advance. All right. So again, I'm just trying to show you that aspect of the Discord that you have these things before the retail crowd has them. Make sure that you guys are updating yourselves on these deltas. That is up to you to pay attention to, right? Whether you need to set notifications or constantly ask Scalper for updates every few days. Again, use these tools to your advantage, bringing you back to the beginning of this post. In order to be numbered among the fit in these markets, it is necessary to be fully informed. And these institutional deltas give you a piece of that information. Now here in the CYPRX private Discord, if you go to the Delta education section, all right, there's a full document, albeit this is broken down utilizing deltas on gold. It is a full detailed explanation on how you can utilize and implement my strategy on the deltas, literally step by step. And if you come right down here, as we shift into the technical aspect of this, look at what I say right here. Banks like to buy from a discount. Banks like to grab liquidity via less informed money, and banks like to buy from deltas. This means knowing all this, we can gather an edge, wait patiently for retail to get liquidated, and we can wait for price to come back into area number 2 in some form of a discount, and we can wait for the price to come down and revisit the delta zones. All right. And so in this example, I show you guys how price action broke above a delta. Once you see bullish momentum pushing price away from a delta, all that's left for you to do is find a break of structure, find the A to B move, utilize your Fibonacci, and wait for price action to come into at least a 62 to 70% discount, preferably 79% discount, to look for an entry or a market continuation buy move, right? And this PDF breaks that whole entire process down. So that's exactly what I did today on Bitcoin. So to break down the technical aspect of it, now having shown you guys that before the move played out today, we had discussed and talked about the fundamental environment that would create a move like this. So we already knew the supportive fundamentals that we needed to see in order to take confident buy positions. I showed you guys in the Discord that well in advance, we had already seen the institutional levels we wanted to see Bitcoin react to. And here in this area, back on back on April 7th, institutional scalper had shown us that the institutions had reacted to this initial dark pool level. Fast forward over here to the last 24 hours, starting at this New York session, is where we're going to start our technical analysis. Because when I woke up today to trade New York session, if we hit the replay button, this is the amount of price action that I had to go off of to gauge what direction I wanted to be trading into today. All right. So utilizing this information before we start looking at New York session. Okay. I always tell you guys, especially in the CYPRX 2.0 content, go in and look at what the previous sessions were doing, right? You can go back 2 days, you can go back 3 days. I prefer not to go back any farther than 3 days. 3 days is plenty enough of price action if you're a scalper to look at what the markets were doing to gauge what they could possibly do in the future based off of where institutions were buying and selling from. Based off the document that I just showed you guys, logical analysis says that banks like to buy at a discount. They also like to buy at deltas, right? And so here in this area, starting at this Asia session, the green lines, the green vertical lines represent Asia session, blue is London, and red is New York, for those of you all who can't see the fine print or the text, right? So look at this. Again, this is all the price action that I had today to analyze to gauge what direction I wanted to be trading in for today's New York session, right? So starting here, just looking back a few days in terms of price action, we can see that this Asia session, what did they do? They trapped sellers above highs, pushed price action down into the institutional dark pool deltas, and as soon as Asia session transitioned over to London, price action stalled out, buyers came in, price action transitioned over to London, and London session buyers continued to gain momentum. Price action was then passed over to New York session traders. They retested the dark pool delta and continued the uptrend momentum. So this is 1 day's worth of price action, right? 1 day's worth of price action then transitions over into this was Monday's price action. Monday, we know that there was no fundamental news. There was no scheduled data events, right? And we can kind of see some slight profit taking and some consolidation. Rolling over into the session today, starting with today's daily candlestick open, we can see that yet again, Asia session traders, here's Asia session indicated by this green line, did the same exact thing that they did their last session. They pushed price action down into the institutional dark pool delta. Buyers came in defending their previous orders from previous Asia and London sessions, and the market made the institutional pattern that we like to look for here at CYPRX, which is a rejection of not only a psychological level, but a push away from an institutional delta that leads to a break in market structure, i.e. previous sellers being overpowered by buyers, right? So we can see here in this area, the daily candlestick starts right here. Where's the buy momentum or where's the momentum in the markets? Clear as day, institutions are defending their buy positions at these deltas, gaining enough momentum in the market to break previous sell positions or hunt over leveraged sellers. So now, moving into this New York session, all I'm thinking to myself is if fundamentals can continue to gather momentum to support risk assets, which throughout Asia and London session, they were. If you guys go back and read the updates, you can see that in my analysis. And all I'm thinking now is if we can see a discounted opportunity during New York session to take buy scalps, to take price back into the premium areas where previous New York sessions were selling, which is how I gathered that $80,000 target, then that is going to be a solid scalp from the buy deltas. Getting in at an area of interest where previous market makers And now not only one, but two sessions we're buying from, right? Keep in mind, the rest of the retail crowd, because they don't do this type of analysis, what are they thinking and what are they seeing? Their candlesticks are red. Not only are their candlesticks red, but their portfolios are most likely red, and so they are making fear-based and uncertain decisions in the market, right? Whereas here at CyPrX, we're taking a detailistic approach to gather fundamental analysis, slap on top institutional deltas via our charts, and see where the market makers are actually buying and selling from, right? So if I click out of this, we can see clear as day, looking at where Asia session was buying from to where London session started to take profit, or London session traders started to take profit from the beginning of their session when they bought, rolling over into New York. When I woke up this rising, this is where price action was at. And all I simply did, doing the whole entire market analysis that I just gave, was take a fib from this low to the high, as this is a clear break of structure on the hourly time frame, right? We can see a lower high here in this area. This is where the daily candlestick came in, trapped sellers in the market. Buyers came in to defend the dark pool, and that led to a break in market structure. So this is your new A to B move. Just like I said in the document, after price rejects a delta, after the market shows interest to buy where a previous bank bought from, all that's left for you to do is wait for price to come into discount. Sure enough, price pulled back into the 70% sweet spot. I prefer 79%, but we did not get that. So I actually entered into this position a little bit late. I originally had some pending buy limits here at the delta to see if price could tap into the 79% sweet spot, but those were not hit. And so I ended up having to chase the market a little bit and enter into positions with buy stops above these previous bearish candlesticks. So my entries in the market today were all here in this area. Once we started to reject the 70% sweet spot and we started to rise back above the 50% retracement, I started to enter into the market with the stop loss nice and tight beneath the Asia session low, i.e. the daily low. And I was simply just targeting premium areas where previous New York sessions were selling from, right? I.e. the targets that I gave you guys days in advance, the 80 to 84,000 range, right? But now, looking at the charts, you can see that these institutions are trading strictly from delta to delta. So if we look at where price action is currently about to hit, the 83499 institutional delta, if we go over and we look at the last updated deltas on Bitcoin, again, this is from April 7th, 2025. If I zoom in on the numbers right here to the April 7th deltas, the sell deltas that Scalper gave you guys, look at this, 83499 right there. And you can see that as of time of recording, that is exactly where price action is about to tap into. I wouldn't be surprised if we break slightly above that and tap into this dark pool at the 84228 before we see some slowing momentum or some profit taking in Bitcoin, right? Intraday. Because clear as day, the momentum is to the upside right now until we see sellers come in to defend their positions once we get up into these highs, right? So very simplistic, easy detailed analysis. I mean, this was CYPRX 2.0 with institutional order flow combined. You guys have access to learn this strategy in detail, whether it's your fundamental take, institutional delta take, doing the research on the deltas, reading through the PDFs, looking at the setups and learning them, right? Opening up a demo account and then actually practicing this stuff. It's extremely easy to grasp. You just have to put in the elbow grease and the time and just pay attention to detail, right? I'm nothing special. I'm not some magic freaking guru, and I don't have any magic answers to give you guys. I just have a solid ass strategy with a very low lose percentage ratio because I only look for these things, right? The same analysis that I gave you guys like 2 weeks ago, right, on that Bitcoin trade that I had is the same exact setup that happened. And exactly what I wrote you guys in this document here about how banks like to buy at a discount after they break away from a delta. All you literally have to do is wait for price to come into a discount and retest the delta to look for solid entries, gauge your risk, right? If you're trading on a leveraged account, you shouldn't be risking any more than 1%, in my personal opinion, 0.5% at best. Take the risk, find a solid place via a previous low to place a stop loss and take the position. If you go over here You look at the XRP chat. So let's say that you trade XRP day trade. Look at this. April 7th, 2025, days in advance. Scalper gave you guys deltas on XRP. So when XRP tapped into the 163,195, just like Bitcoin tapped into the 75,490, Scalper gave you guys that delta. All you had to do was wait for price to retest the delta on XRP. Sure enough, look at this. Here's where Scalper gave you guys the deltas on the 7th. Price action broke away from the deltas. Same thing on Bitcoin. You can see here, buyers coming in, overpowering sellers on the daily, because here's the daily open. So this is now a new daily high. The new daily candlestick started here. Price action retraced into a discount. And Asia session buyers literally just did the same thing that they did on Bitcoin, and they bought at a discount from where they previously bought from. And there was a nice day scalp on XRP, right? A price push away from the deltas that you guys had days in advance. So it doesn't matter if you're doing this on Bitcoin, doesn't matter if you're doing this on XRP, it doesn't matter if you're doing this on oil, gold, right? Understand the fundamentals first. What market environment could be created based off of certain market conditions? Go in, apply the deltas to give yourself a visual perspective on where we should be buying and selling from, being patient, creating areas of interest for ourselves to look for these patterns. And when they play out, all that's left for you to do is wait for a break of structure for buys, wait for a pullback for entries, and expose your capital by utilizing sound risk to reward ratios. That's it. It's literally that simple. I mean, I know that it seems a lot more complex when it actually comes down to performing the action of trading, but it's really not. Anything that you bring to the markets outside of what I just showed you guys is a personal infliction. The market, again, doesn't care about what you bring via the outside in. It only cares about things that I just showed you guys, the fundamentals, right, that create the volume and volatility in the market, which we've confirmed from large financial participants in this space, right? Algorithms having to adjust to certain changing conditions, whether the market sentiment is risk on, risk off, whether the market currently favors safe haven or risk assets. Know those things, right? And that's why I give you guys these detailed reports.
However, there are strong indications to believe that the long-term megatrend for crypto assets remains unaffected by the current market volatility.